Current market status closed. As of the close of the shortened trading session on Friday, November 28, 2025, Nvidia Stock, ticker NVDA, finished at $176.98, down approximately 1.82% for the day. The king has flinched. For the last 3 years, the expectation regarding Nvidia has been absolute, almost theological, that it is the unassailable toll booth of the future, the singular entity through which all artificial intelligence must pass. The narrative sold to every retail investor opening a Robinhood app and every fund manager adjusting their Fidelity wealth management strategies is that Jensen Huang's green empire is a monopoly without a credible second place. The market believes that while others play for silver, Nvidia owns all the gold. But the reality, revealed in the brutal, low-volume chop of this post-Thanksgiving week, is that the hyperscaler betrayal has officially begun. The drop to $176.98 isn't just a technical correction or a holiday hangover. It is a direct, visceral reaction to the news that Meta Platforms, Nvidia's voracious customer, is in advanced talks to procure billions of dollars in AI chips not from Santa Clara, but from Mountain View. The revelation that Google's TPUs, or tensor processing units, and the Gemini 3 model are now viable, scalable alternatives for the likes of Mark Zuckerberg destroys the invincibility premium baked into this stock. You aren't looking at a dip. You are looking at the first structural crack in the dam. Let's analyze exactly what is happening to Nvidia stock right now. This week's price action has been a psychological thresher for those engaged in self-investing. If you look at the intraday charts from Friday's shortened session, you see a stock gasping for air at the $180 level and failing repeatedly. Institutional capital, the kind managed through Interactive Brokers trading desks and massive Fidelity brokerage accounts, was noticeably heavy on the sell side. We saw a distribution pattern where large block orders were unloading into retail buying pressure. While the Robinhood stock trading crowd was likely buying the dip, thinking this is just another routine pullback, the smart money is visibly de-risking. Why? Because the Meta-Google alliance changes the total addressable market, TAM, equation. If Meta shifts even 10% of its compute spend to Google's custom silicon, Nvidia doesn't just lose revenue, it loses pricing power. The gross margins that have hovered above 70%, the metric that justifies the valuation, come under immediate fire. When you log into your SoFi investing dashboard or check your Schwab Intelligent portfolios, you might see Nvidia classified as a strong buy based on lagging indicators like last quarter's earnings. But markets are forward-looking mechanisms. The market is currently pricing in a 2026 when Nvidia is no longer the only option, but simply the best option. And those are two very different valuation multiples. The price of $176.98 sits precariously on a technical support shelf. If you study the volume profile, the 175 to 172 zone is the last line of defense before a potential washout down to the 160s. The gamma squeeze dynamics that previously rocketed the stock upward are now working in reverse. As the price falls, market makers hedging their put options are forced to sell shares, adding fuel to the fire. But we must examine the counter-narrative. Is this an overreaction? Contrarian investors using Interactive Brokers platforms to access global markets might argue that the death of Nvidia's monopoly is greatly exaggerated. Even if Google and Meta successfully deploy TPUs, they are restricted to their own ecosystems. Nvidia remains the merchant silicon for the rest of the world. Every sovereign nation building its own AI infrastructure, from Japan to the Middle East, is buying Nvidia. Every Fortune 500 company not named Google or Meta is buying Nvidia. The investment help you might get from a Fidelity robo-advisor often emphasizes diversification, but in the AI hardware space, Nvidia is still the only company offering a full-stack solution: chips, networking via Mellanox, and software CUDA. The expectation is that custom chips will kill Nvidia. The reality might be that custom chips only skim the low-end workloads, while Nvidia retains the high-margin, complex training tasks that actually matter. Let's pause on the mechanics of the trade for a moment. If you are handling your own individual brokerage account, you need to understand the role of implied volatility here. The IV on Nvidia options has spiked, indicating that traders expect massive turbulence ahead. This isn't a slow drift. This is a coiled spring. For those of you utilizing Robinhood fractional shares to dollar-cost average, this volatility is painful but potentially opportunistic. But for those on Interactive Broker's stock trading margin accounts, the risk of a margin call at the $170 level is real. The algorithmic trading bots that dominate modern market structure are programmed to hunt for liquidity. They know that retail stop losses are clustered right below 175. It is highly probable that we see a flush early next week to trigger those stops before any genuine recovery can happen. Now, we need to broaden the scope to the macroeconomic pressure cooker. We are currently in a high capital expenditure cycle that makes the dot-com build-out look like a warm-up. Microsoft, Amazon, and Google are spending upwards of $50 billion a year on infrastructure. Until now, that money flowed largely into Nvidia's pockets. The recent news cycle suggests a pivot. If you are using Invest Online tools or reading reports from Fidelity Investments, you've likely seen the term CapEx fatigue. Investors are asking, where is the ROI? If the hyperscalers cannot prove that buying $30,000 Nvidia GPUs generates profit, they will stop buying them. This is the existential risk that hangs over the stock at $176.98. It's not about competition from AMD. It's about the customers simply closing their wallets because the AI applications aren't making money yet. This brings us to the operating core of the company. For those new to online investing or perhaps just holding SoFi stocks without digging into the 10K filings, Nvidia is not just a hardware manufacturer. It is a platform company. Its secret weapon is not the H100 or the Blackwell chip. It is CUDA. This software layer has been the moat that prevented anyone from leaving. The Google Meta news is significant because it implies that for the first time, big tech companies are willing to do the hard work of rewriting their code to run on non-NVIDIA hardware, like TPUs. If CUDA's lock-in breaks, the premium on the hardware evaporates. However, NVIDIA has anticipated this. They are aggressively pivoting to become a data center as a service company, leasing their own compute power through the DGX cloud. They are trying to become the utility company, not just the shovel seller. Let's look at the institutional flows again. Fidelity mutual funds and Fidelity ETFs have been some of the largest holders of NVIDIA. In the latest 13F filings, we saw a mixed bag, some trimming of positions to lock in profits, but no wholesale abandonment. This suggests that the smart money sees this as a cyclical consolidation, not a secular decline. They are waiting for the Blackwell supercycle to fully ramp up. The Blackwell chips are sold out for 12 months. This demand backlog provides a revenue floor that bears often ignore. When you use investing sites to check the PE ratio, it looks high, around 44 times. But if you factor in the projected growth from Blackwell deliveries in 2026, the forward PE compresses significantly. The behavior of retail investors is equally fascinating. On Robinhood crypto forums and SoFi active investing chats, the sentiment has shifted from euphoria to anxiety. This sentiment shift is actually a bullish signal for contrarians. Markets bottom when retail investors are scared, not when they are greedy. The weak hands are being shaken out at 176. The question is, do you have the conviction to stand on the other side of that trade? I want you to pause right now and think about your own position. Comment below how many shares of Nvidia stock you currently hold and what your average buy price is. Are you underwater at these levels, or are you sitting on gains from 2023? I want to see where the community stands. Moving into the future outlook, we have to talk about sovereign AI. This is the bullish catalyst that nobody is pricing in correctly. Nations like India, France, Canada, and Singapore are realizing that they cannot rely on American tech giants for their AI infrastructure. They want their own AI factories. Who builds those factories? Nvidia.